Capital Logic. Today's case study, Costco's hot dog strategy, how intentionally losing money on food drives massive membership revenue. We're going to show you exactly how this business model works, where the money actually comes from, and what most analysts miss. Like and subscribe if you want this kind of breakdown every week. Here's what you need to know. Costco's famous $1.50 hot dog combo has intentionally lost money for decades, yet it's one of the company's most profitable business decisions. It's a masterclass in strategic pricing and customer loyalty, but it's not just about cheap food. Stay until the end. I'll break down 3 lessons from Costco's playbook you can apply to your business this week. If you want business breakdowns you can actually use, hit subscribe and the bell. You walk into a Costco warehouse, navigating the towering shelves, the scent of fresh-baked goods mingling with something else, something undeniably American. And then you see it, the food court, a beacon of cheap eats, a promise of satisfaction after a long shopping trip. But there's one item that stands above the rest, a true legend in the world of retail strategy, the hot dog and soda combo. For just $1.50. Think about that for a moment. $1.50. This isn't some retro price from a bygone era that's slowly crept up with inflation. This is the price it's been since 1985. Yes, 1985. The year Back to the Future premiered, the year Live 8 happened, the year the average price of a gallon of gas was $1.12. In the nearly 4 decades since, the cost of everything has skyrocketed. A gallon of milk, a loaf of bread, a movie ticket to all dramatically more expensive. Yet Costco's iconic quarter-pound, all-beef hot dog and 20-ounce soda, still $1.50. This isn't an accident. It's a deliberate, almost defiant, act of business strategy. It's a lost leader so legendary, so deeply ingrained in the company's DNA, that it has become a symbol of Costco's entire philosophy. In 2022 alone, Costco sold a staggering 171 million of these combos. That's more than 500,000 hot dogs every single day. To put that in perspective, that's enough hot dogs to stretch from Los Angeles to New York City and back twice. And the story behind its unwavering price is even more telling. Current CEO Craig Jelinek once suggested to co-founder Jim Sinegal that maybe, just maybe, it was time to raise the price. Sinegal's response, now a legendary quote, was unequivocal. "If you raise the effing hot dog, I will kill you." Figured out. A direct order, a non-negotiable mandate. And figured out they did. To maintain that $1.50 price point, Costco took radical steps. They didn't just absorb the cost, they internalized it. Before 2009, they were selling Hebrew national hot dogs. But as their sales volume grew and the cost of ingredients fluctuated, they realized they needed more control. So by 2009, Costco had built its own hot dog manufacturing plants, 2 of them in California and Illinois, to produce their Kirkland signature brand hot dogs. This vertical integration allows them to control supply, quality, and crucially, cost. It's a masterclass in operational efficiency, all in service of a single, seemingly trivial menu item. But why go to such lengths for a hot dog? Because this isn't just about a cheap lunch. This is about psychology. This is about trust. When you see that $1.50 hot dog, it's not just a transaction, it's a statement. It tells you, the customer, that Costco is on your side. In a world where prices are constantly inflating, where every company seems to be looking for ways to squeeze a little more out of your wallet, Costco stands firm. They are telling you, in the most tangible way possible, that they are committed to providing unbeatable value. This psychological anchor is incredibly powerful. It creates a halo effect that extends across the entire warehouse. If Costco is willing to lose money on a hot dog to keep it at $1.50, imagine the value you must be getting on a bulk pack of paper towels or a flat-screen TV or a giant tub of peanut butter. It reinforces the perception that every item in the store is priced fairly, that you're always getting a deal. It makes you feel smart for shopping there. It makes you feel like you're part of an exclusive club that understands true value. And that feeling, that deep-seated sense of trust and value, is the engine that drives Costco's entire business model. Because Costco isn't primarily in the business of selling hot dogs or even groceries. Costco is in the business of selling memberships. Think of the hot dog, the rotisserie chicken, and even the gas pumps as powerful magnets. They pull you into the warehouse, not just for the hot dog itself, but for the experience, for the promise of savings. And once you're there, once you've paid your annual fee, you're far more likely to fill your cart with higher margin items, even if those margins are still razor-thin by traditional retail standards. The hot dog combo, the $4.99 rotisserie chicken, which, by the way, has also held its price since 2009 despite rising poultry costs, costing Costco an estimated $30 to $40 million annually in foregone profits. These are not just loss leaders. They are strategic investments in customer loyalty. They are the psychological glue that binds members to the Costco ecosystem. The numbers don't lie. In fiscal year 2023, Costco's net sales reached a staggering $237.7 billion. But here's the crucial part. Their gross margin was just 10.5%. Compare that to Walmart's 24% or Target's 28%. Costco operates on incredibly thin margins, typically marking up products by just 10 to 14%, far below the 25 to 50% or more seen in traditional retail. How do they make a profit then? The answer is simple, yet brilliant: membership fees. In fiscal year 2023, those fees accounted for $4.4 billion in revenue. To put that in perspective, that $4.4 billion represents approximately 75% of Costco's total net income for the year. It's a predictable, high-margin revenue stream that largely covers their operating expenses and then some. It's the engine that allows them to sell everything else at near cost. And what keeps that engine running? The perception of value, heavily influenced by those iconic, unchanging prices. The $1.50 hot dog, the $4.99 chicken, the $9.95 pizza, they all scream deal. They make the $60 annual Gold Star membership, or even the $120 executive membership, feel like a no-brainer. You feel like you're getting your money's worth, and then some, just from these few items. The proof is in the renewal rates. In fiscal year 2023, Costco boasted an astonishing 92.7% membership renewal rate in the US and Canada. Worldwide, it was 90.4%. Think about that for a moment. Over 9 out of 10 people who pay to be a member of Costco choose to renew year after year. That's not just loyalty, that's a deep, unwavering commitment. And it's built on the foundation of perceived value, where a $1.50 hot dog plays an outsized role. This isn't just about selling cheap food. It's about a sophisticated, long-term strategy that leverages human psychology and operational excellence to build an incredibly resilient business model. It's about understanding that sometimes losing a little money on one item can lead to billions in revenue elsewhere. But there's more to this story than just hot dogs and memberships. But the hot dog isn't just about the hot dog itself, is it? It's a carefully engineered psychological trigger. You've just walked out of the warehouse, maybe you've spent a few $100s, and you're feeling a little bit of buyer's remorse. Then you see that $1.50 hot dog and soda combo, a beacon of unbelievable value. That feeling of getting such an incredible deal, almost a steal, it reinforces every other purchase you just made. It tells your subconscious, see, this is why you pay that membership fee. This is why you shop here. Everything here is a fantastic deal. This isn't just a theory. It's a core part of Costco's strategy. The food court, and especially that hot dog, acts as a psychological anchor, solidifying the perception of value across the entire warehouse. It primes you to believe that if that hot dog is $1.50, then everything else must be equally well priced. And that belief drives you to fill your oversized cart with bulk items, often far more than you initially intended. Think about it. You're already committed. You've paid the annual membership fee, $60 for Gold Star, $120 for Executive. You're already inside. Costco knows that once you're through those doors, you're likely to spend. The average transaction size at Costco is significantly higher than at traditional supermarkets, partly because of the bulk purchasing model. You're not just picking up a single item. You're buying a month's supply of paper towels, a gallon of olive oil, or a massive bag of frozen chicken breasts. And this is where the real genius of Costco's model, and the hot dog's role in it, truly shines. It's not just about getting you through the door. It's about getting you to spend once you're there. And a huge part of that spending goes towards Costco's own private label, Kirkland's Signature. This brand isn't just a generic alternative. It's a powerhouse. Kirkland's Signature accounts for approximately $60 billion in annual sales. That's a staggering figure, making it one of the largest consumer brands in the world, often outperforming national brands in blind taste tests and quality comparisons. The hot dog combo, the rotisserie chicken, the $9.95 pizza, they all contribute to an ecosystem where members feel they're getting unparalleled value. This feeling encourages them to trust the Costco brand, and by extension, the Kirkland Signature brand. When you see a Kirkland Signature product, you inherently associate it with the same incredible value you get from that $1.50 hot dog. And remember, while the hot dog is a loss leader, many Kirkland Signature products, despite their low price point, are still sold with Costco's typical 10 to 14% markup. This is significantly lower than the 25 to 50% or more seen at traditional retailers. But when applied to $60 billion in sales, it generates substantial revenue. So, you're buying a 36-pack of Kirkland Signature toilet paper, a giant tub of Kirkland Signature mixed nuts, and a case of Kirkland Signature bottled water, all because that $1.50 hot dog, that $4.99 rotisserie chicken, and that $9.95 pizza have convinced you that Costco offers the best possible deal. The food court isn't just feeding you, it's feeding into your perception of value, making you a more loyal and profitable customer. But how does Costco manage to pull this off? How do they sell so many items at such razor-thin margins, or even at a loss, and still remain incredibly profitable? This isn't just about clever marketing. It's about operational mastery on an epic scale. Let's go back to that hot dog. For years, Costco sold Hebrew National hot dogs. But by 2009, they had built 2 of their own hot dog manufacturing plants, one in California, one in Illinois. Why? To control costs. By vertically integrating, by producing their own Kirkland Signature hot dogs, they eliminate the middleman, they control the supply chain, and they ensure they can maintain that sacred $1.50 price point, even as the cost of beef fluctuates. This isn't just about the hot dog. It's a philosophy applied across their business. Take the rotisserie chicken. At $4.99, a price point maintained since 2009, it's another legendary loss leader. Costco sells over 100 million of these chickens annually. It's estimated that this single item costs Costco $30 to $40 million annually in foregone profits. But just like the hot dog, it's a traffic driver, a value perception builder. And just like the hot dog, Costco has invested in its own poultry processing facilities to maintain that price. This relentless focus on cost control and efficiency is evident throughout their operations. Costco keeps its stock-keeping units, or SKUs, incredibly low, around 4,000. Compare that to 30,000 to 60,000 at a typical supermarket. This limited selection allows them to buy in massive volumes, negotiate better prices with suppliers, and achieve incredible economies of scale. Their average inventory turnover rate is around 12 times per year, meaning products aren't sitting on shelves accumulating costs, they're moving. Costco's gross margin in fiscal year 2023 was 10.5%. Now, that sounds low, doesn't it? Especially when compared to traditional retailers like Walmart, which sits around 24%, or Target at 28%. But this is the crucial distinction. Costco isn't trying to make its profit from product markups. Its business model relies on selling products at near cost, often with that 10 to 14% markup, but making its profit from membership fees. In fiscal year 2023, Costco's net sales were a staggering $237.7 billion. And what about those membership fees? They accounted for $4.4 billion in revenue in that same year. Here's the kicker. That $4.4 billion represented approximately 75% of Costco's total net income. Let that sink in. 3/4 of their profit comes directly from the annual fees members pay. This is why the hot dog, the chicken, the pizza, the cheap gas at their stations, the optical and pharmacy services, they're all designed to do one thing. Make that membership fee feel like an undeniable bargain. They are all components of an elaborate, highly efficient machine designed to drive membership renewals. It works. The membership renewal rate for Costco in fiscal year 2023 was an astounding 92.7% in the US and Canada and 90.4% worldwide. People are not just joining, they're staying. Costco's operating income for fiscal year 2023 was $7.9 billion, and net income was $6.3 billion. They achieved this not by maximizing profit on every item, but by maximizing membership value, driving immense sales volume, and operating with ruthless efficiency. They even pay their employees significantly higher wages than the retail industry average, exceeding $25 an hour in the U.S., which leads to lower turnover, better customer service, and a more positive shopping experience, further reinforcing the membership value. So, what you see as a $1.50 hot dog isn't just lunch. It's a meticulously calculated piece of a multi-billion-dollar puzzle. It's a loss leader that generates goodwill, drives foot traffic, anchors value perception, and ultimately helps secure those incredibly high-margin membership fees. It's a testament to a business model that defies conventional retail wisdom, proving that sometimes, to make billions, you have to be willing to lose a little or a lot on a hot dog. Now here are 3 lessons from Costco's playbook you can apply to your own business. Lesson 1. Anchor value with loss leaders. Identify a highly visible product or service you can sell at or below cost to attract customers and drive sales of more profitable core offerings. Think about Costco's hot dog and rotisserie chicken. They're not just cheap food, they're a powerful psychological anchor, making everything else seem like a better deal by comparison. Lesson 2. Prioritize long-term customer loyalty. Resist short-term profit temptations on key value items to build trust and ensure consistent, high-margin recurring revenue streams like memberships or subscriptions. Costco could easily raise the price of their hot dog, but they know the long-term value of that unwavering trust far outweighs a few extra cents. That trust translates directly into those $4.2 billion in membership fees. Lesson 3. Control your supply chain. Consider vertical integration or strong supplier partnerships for critical components to maintain price stability, quality, and insulate your business from external cost fluctuations. Costco doesn't just buy hot dogs, they own the entire process from the meat to the bun, ensuring they can keep that price fixed regardless of market volatility. It's a level of control few retailers ever achieve, and it's a massive competitive advantage. If you want more business breakdowns you can actually use, subscribe. I'll see you in the next one. That is Capital Logic's breakdown of Costco's hot dog strategy, how intentionally losing money on food drives massive membership revenue. Every business has a hidden architecture. We find it, we explain it, and we show you what it means. Subscribe and hit the bell so you never miss a case study. We'll be back with another one shortly.